Here's the 30-second lesson on what legends know. Never practice nunchucks in a crowded room. Never eat chole before a road trip. Always take your shirt off before you iron it. Don't take a call near a swimming pool. And don't forget, saving is not investing. Legends don't just save, they invest in mutual funds. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello and welcome to this episode of Macro Sutra. I'm TCA Sharad Raghavan, Deputy Editor at ThePrint. Now on Saturday, the GST Council is meeting once again, and it has a wide range of things that it needs to discuss and that it will discuss. But overall, there are several pending issues to do with GST that need to be fixed. Whether they're fixed in this meeting or in subsequent meetings, they are still nevertheless important issues. And that's what we're going to discuss in this episode. And to elaborate on them, we have with us Radhika Pandey, Associate Professor at NIPFP. Thank you so much, Radhika, for joining us.
Thank you, Sharad.
So now, Radhika, when we talk about GST collections, it's not just important from the point of view of understanding how much the government is making from the tax, right? It has other policy implications as well.
Absolutely. GST collections tell us about the state of consumption because it's a consumption-based tax, it's a destination-based tax. So it tells us about the state of consumption. And particularly if we look at the state-level GST collection, it will help us in understanding whether the subdued consumption that we are seeing in the NAS data, we saw the consumption is having growth of only 3 to 4%. Is that a pan-India phenomenon, or is it concentrated amongst a few states? So GST collections gives us an idea about the state of consumption across different states. It tells us about the level of variability. It tells us about, because we have time series data, we can actually see which state has experienced growth in state-level GST collections, which state has reported muted growth. So that is one element. But further, to improve its effectiveness, we should normalize it or divide it by per capita income. Because if we look at the states, particularly if we look at bigger states, they will show higher consumption levels because they are populous states. So if we look at just the absolute levels of GST collections, we will see that, Maharashtra, Gujarat, Karnataka, UP, they feature as states having higher consumption levels.
Of course, because they're bigger, they have more people.
There are more people there, yeah. So therefore, to remove that bias, if we look at GST collections per capita, that will be a better measure. And when we look at that, it tells us that, the smaller states like Sikkim, Goa, they are better in terms of improved consumption levels. And therefore, when we look at GST per capita, Uttar Pradesh comes, the rank is much lower as compared to when we only look at the absolute levels. The other interesting element is that this data, when we look at GST collections per capita, it ties in very well with what we discussed earlier, which is the monthly per capita consumption expenditure, which comes as part of the household consumption expenditure survey data that was released recently, and a detailed report was released last week. There we see that, the states having higher per capita consumption expenditure, monthly per capita consumption expenditure, they are more or less the same as those having higher GST collections per capita. So we don't need to wait for the consumer expenditure survey that comes with a lag of 5 years in normal times. It may get further delayed, as we saw in 2017-18. So it's better that, the GST collections data can be an effective monitoring tool to assess the level of consumption and to also see the level of variability and growth rates. And that will help in designing appropriate policy tools to address the level of subdued consumption.
Right. And so now one of the improvements that is commonly accepted that needs to happen with GST is that there are just too many rates right now, and that these need to be reduced. So towards this, we have an audience question from Aditya, who says, do you think it's high time that we finally did away with the 28% rate and just keep the three rates of 5, 12 and 18%?
So currently, we have multiple tax. So we have 5, 12, 18, 28. Then we have some special tax on gold, silver and precious stone. And then on top of 28%, we have the GST compensation cess, which was initially supposed to be for 5 years, but it was extended further to retire the loans which central government took during COVID time to compensate states for the loss of GST, for the loss of revenue. Now, 7 years have passed since the rollout of GST, and one of the major reform that is now needed is the move towards simplification and rationalization. Now, there could be various pathways towards simplification of tax rates. One, definitely, as what Aditya suggests, that we do away with 28% tax rate. But the other argument is that we keep the 28% for a limited number of goods, which are like demerit or sin goods, and try to merge the lower tax rate. So there could be various possible pathways towards moving towards a simplified, rationalized tax. And here it is worthwhile to note that the 13th Finance Commission, whose chairman was Vijay Kelkar and who's considered the architect of GST regime, he proposed that the GST rate there should be only one low single tax rate, which should be 12%. Right. So there are, as I said, there are various possible pathways. It is not something that we can move to the single rate at one go. But yes, discussions need to start on the phased movement towards a rationalized tax rate. What we can say is that, the Ministry of Finance, some statements that have come from the secretary level official, they normally are in favor of keeping the 28% for a very narrow set of goods, like the sin goods, the demerit goods, and would try to merge the three other rates or reduce the number of items within those. So that is the possible pathway. But ultimately, we have to move towards rationalization. And another exercise that is needed for this is to consider what is the consumption expenditure under each of these tax brackets. Right, that is very important, that how much tax revenue you are getting from the consumption of items under each of these tax brackets. I think that empirical exercise should inform the discussion towards rationalization of tax rates.
Right. So actually, it's interesting you mentioned that, because we have another question from Mridul. He asks that the luxury goods are in the 28% tax bracket. While he says that while theoretically this is a progressive move, some people say that it causes a loss of employment. One, could you explain this? And two, there is some research that you had talked about in your article, which was talking about whether GST is regressive. And what consumption patterns are we seeing in the different tax brackets? So could you tell us more?
Yeah, so I'll start with that research. So that's research published in the Economic and Political Weekly by NIPFP Professor Mukherjee. What he has done is he has analyzed the distributional burden of GST across various items of consumption. So various items of consumption are categorized into the tax brackets. We know that there are a bunch of items which are exempt, so that is 0. Then there are items under 5%, 12%, 18%, 28%. So once we have categorization of all items of consumption into each of these tax brackets, then he categorizes the households into fractile classes. Maybe it's a simpler way to say, lower income strata, higher income strata, based on their monthly per capita consumption expenditure. So those having higher overall monthly per capita consumption expenditure, they are at a higher fractile as compared to those having lower monthly per capita consumption expenditure. Then the exercise that he has done is that he's estimated the percentage of exempted goods which are part of the overall consumption expenditure across fractile groups. So whether the high fractile groups are consuming more of exempted goods, or are they consuming more of 5% or 12% or 18%, that will give us a sense of the tax burden. So a very telling picture that has emerged from his analysis is that the exempted items their share of consumption, the share of consumption of exempted items is higher for higher income groups as compared to those for lower income groups. That means that this exemption benefit is being taken by the rich, by the higher income group. So this argument that we cannot dispense away with exemption because it will harm the poor, that is not borne out by the data. Similarly, if we look at 5%, that is progressive because there what he finds is that the percentage of consumption expenditure on 5% items, the items that are taxed at 5%, that is relatively more for lower strata as compared to higher strata. That is fine. But again, the concerning argument is that for the 12% tax bracket, the percentage of consumption is as compared to the overall consumption is higher for lower income group as compared to higher. So that means that the items that are taxed at 12%, they are more consumed by the lower income as compared to the higher income. So again, it's a regressive taxation. Intoxicants, which are subject to 28%, they are again consumed more by the rural people and at the lower income of this population. So these are some of the indications that the paper points out towards regressivity of taxation. And another interesting example which the paper points out is it gives certain examples where there's a lot of complexity. For example, what he says is that the kitchen utensils, if they are made of iron and steel, if they are made of certain kind of metal, they are subject to lower tax rate. Other than that, they are subject to higher tax rate. Similarly, apparels, lower than rupees 1,000, taxed at 5%. Above 1,000, taxed at 12%. So there is this, the similar products are being taxed at different levels. That creates a scope for tax leakage, and that creates problems in monitoring, and therefore these product specific imposition of taxes that should be addressed. And that makes his analysis a bit tougher because you don't know whether clothes you want to club it in 5% or 12%, because it is subject to 5% also and subject to 12% also. So, but taking into account all these issues as well, the broad argument is that the percentage of exempted items are consumed relatively more by the higher income group, and then 12% items are more for the lower income group, and therefore they are bearing the higher burden. So these are some of the examples that they point out, which show that there is regressivity. What is needed is there's scope for doing more such exercises, and that should precede any move towards rationalization. We want to first understand what is the consumption expenditure of various items that are subject to different tax brackets, and that will help us in gauging if we merge certain taxes, which proportion of population or which kind of household would be impacted by that.
Right, and so now we have a lot of questions from the audience, and they're very good questions. So I'm going to keep interspersing them. So related to what you were just talking about, Gautam has a question where he says that with the rumors that the new budget in July might bring some changes in income tax by lowering some rates, do you feel that the GST regime might also see some changes with respect to some routine items that are currently in the 12 to 18% bracket, given that the overall GST collections have been quite robust?
Ideally, that should happen because GST collections have been robust, and there should be more movement towards tax rationalization and simplification, because there are so many layers of complexity that we spoke about. We talked about the kitchen utensils being taxed at different rates, apparel being taxed at different rates. The items like if pulses are dehusked, that is no longer an agricultural produce, and therefore it is subject to GST. Whereas if pulses straight from field is agricultural produce and is not subject to tax. Similarly, very interesting example is of bottled water. That is subject to a lower GST rate. Mineral water is subject to higher GST rate. And therefore, there was this debate around how should Ganga Jal be taxed? Should it be taxed?
Right.
And whether it should puja samagri. So all these problems emerge mainly from the fact that because we have multiple tax, it results in classification related issues, and therefore ideally the GST Council should start, even if they won't be able to address all these contentious issues, at least initiate a discussion, indicate that they are looking at these problems. And the first step towards this is that reconvene the group of ministers that is responsible for looking at rate rationalization. Currently, that has also not happened. So all these steps, it's because now we have 7 years, we have the experience. So now more empirical analysis and then move towards simplification and rationalization of tax, ultimately moving towards lower taxes, single rate of tax. Because if we look globally, 80% of countries have a single tax rate, be it Australia, New Zealand, Canada, South Korea, Indonesia, Bangladesh. All these countries have a one single tax rate. So there should be a phased movement towards a single tax rate.
And there are some items that are currently outside of GST, most notably being alcohol and fuel. So now here we have two questions from the audience that come at the issue from opposite sides. So Aditya asks, don't you think that in order to bring alcohol and petrol under GST, a compensation scheme like it was proposed in the beginning should be brought in so that the states can be compensated for any loss of revenue because of this? And another question on the flip side, Sanjay asks, is it not prudent to keep petrol and diesel outside of GST and let it be heavily taxed to pressure people to transition more towards greener fuels?
Okay, so first addressing Aditya's question. So if we look at petrol and diesel, we have seen that the central government has indicated that they are okay, they are open to the talks about bringing the petroleum products within the GST ambit, and it all depends on states. And we have seen that some of the states whose own tax revenue depends a lot on petroleum taxes, they are vehemently opposed to bringing petroleum products under the GST ambit. Though it will be beneficial for consumers, it will be helpful in lowering inflation rates, but the flip side is that it will have adverse implications for state finances, and therefore, as suggested, there has to be some compensation package. Now, again, compensation package is a very vexed issue. We have seen earlier when Mr. Jaitley was the finance minister, how compensation package was arrived at, and then during COVID, the tax revenues fell more drastically and government had to compensate more. So that is something that ideally should be there, that a compensation package should be devised, but what are the contours of compensation package which will be acceptable to both the central government as well as the state government, that is something very contentious. But at least what is important is that a discussion should start happening on this, whether they are, because they have to just notify the date on which these items will be brought within the ambit of GST. It's not that they are out, they have to notify the date on which these items will be brought under the GST net. At least some discussion needs to begin on this so that the stakeholders have greater clarity on whether, if at all, in the medium term, there is some possibility of bringing these items into the tax net, which will further improve the unification and harmonization of markets. It will further improve the harmonization of input tax credit across the entire supply chain, because it breaks down at the time of the fact that petrol and diesel ATF are not within the GST tax net.
Right, and now another structural issue with GST that you also pointed out in your article was that GST revenue right now is not being shared with the local bodies. Absolutely. And that this needs to change.
Yeah, that is I think very important. It should happen, because the third tier of government has a lot of function, and currently with increasing pace of urbanization, urban local bodies have a lot to do in terms of providing public goods, in terms of improving the viability of local infrastructure, and their revenues have also suffered due to the merging of taxes within the GST. Earlier they used to collect octroi, property tax, all that thing is now subsumed within GST. So a natural expectation is that as with states the GST revenue is shared, a small proportion should also be shared with urban local bodies so that their revenue base is bolstered and they are not only dependent on transfers from the central and state government, which hampers the autonomy. We need to give them autonomy, and that will come through greater devolution of taxation. So at least a discussion should start, or there should be some movement towards allocating a small proportion or slice of GST revenues for urban local bodies.
And it will also probably then incentivize them to boost consumption in their local areas, because then the tax revenue will increase.
Absolutely. So it has multifold benefits if that can be done.
Right. And now Mridul has asked two conceptual questions. One, he asks about the revenue neutral rate, and he asks us to kind of explain what it is, how it works. And the second is, people say an inverted tax structure has developed in the system, both in GST and to do with our larger tariff structure. So if it's so obvious that inverted structures hurt manufacturing, why has the government allowed them to persist for so long?
Okay, so the first question was on the revenue neutral rate. So revenue neutral rate conceptually is the rate at which the central and state governments get the same revenues before and after the imposition of GST. That is, when they had multiple indirect taxes, the net revenues that they used to earn is the same as the revenue that they earn after the rollout of GST, after taking into account the various exemptions, the input tax credit, the various, for exporters, the tax is zero, taking into account all sorts of assumption. What is the tax rate at which they are not worse off from the previous situation? So that is the revenue neutral rate. And at the time when there were these discussions around the rollout of GST, at that time the Ministry of Finance committee under the chairmanship of the then Chief Economic Advisor, Mr. Subramanian, yes, so they had a report on the revenue neutral rate. They worked out various scenarios, and according to that committee, the revenue neutral rate is 15 to 15.5%. Now, this is a revenue neutral rate which is a single rate. It has to be broken into the various slabs, because we don't have a singular GST rate, we have slabs. But overall, if we have to converge, it comes to 15 to 15.5%. Now, the other point is that the revenue neutral rate is a dynamic concept. It keeps on changing as the tax slabs are changing. We are reducing tax rates on some commodities. We are taking some commodities into the tax ambit. We are removing some commodities. So the conceptualization of revenue neutral rate keeps on changing, and therefore there is a need to continuously revisit this concept. To say that we should have the revenue neutral rate of 15.5% may not hold true now, because now the effective tax rate is much lower than the revenue neutral rate. So I think more than according more importance to revenue neutral rate, more importance should be towards simplification of tax regime, reducing the tax rates, considering whether you want to do away with 28% or you want to merge 12 and 18%. And on that, there are various studies. Particularly, there's one study by NIPFP which suggests that if you merge 12 and 18%, that will lead to a lot of revenue loss. And for that, then you have to, if you want to compensate, then you will have to raise the 5% rate to 8%.
I see.
And you have to raise the 28% to 30%. So if we have to move towards a 3-rate structure to start with, then some rejig is required for the other rates as well. So I think those are more important policy questions from the viewpoint of reforming the GST tax structure.
Okay, and the other one was the inverted
duty structure. Yes, so inverted duty structure has arisen mainly because we have multiple tax rates. That is the inadvertent implication from the multiple tax rate has been the emergence of inverted duty structure, also the fact that similar products are being taxed differently. There are classification issues. They are all the natural outcomes of having a complex multiple tax rate structure. So as we move towards, and also tax disputes, because they are classification related issues, we have tax disputes. Okay. So as and when we start making progress towards rate reduction, the inverted duty structure would also start getting addressed. And I think in this meeting, there will be some movement towards addressing at least inverted duty structure, which is very prominent in sectors like textile, fertilizers. It's very prominent. So I think that will
basically, just to also explain, inverted duty structure is when your inputs are taxed at a higher rate than the final product. So that's why it's called inverted, because the inputs have a higher tax.
Correct. Right. So that has arisen because of multiple tax structures, and that's very, in some sectors it's very prominent. So it does not even help in reaping the advantages of input tax credits, because you are having higher tax on the inputs rather than the output. So there has been a long pending demand from industries to fix and correct the inverted duty structure. The problem also is that in a sector like textile, there are differentiated players, and they all have different worldview of what should be the taxation. But overall, from an ideal taxation point of view, we should try to fix the anomaly which has crept in the form of inverted duty structure, and that will happen if we start making a move towards reduction of taxation.
Right. So there you go. There's a lot for this GST Council to discuss. Whether it will be able to take up all of these issues, most likely not. But there are several issues to do with GST, to do with the number of rates, rationalizing them, the items that are in different baskets, whether it is regressive in nature or not. Are poor people ending up paying, at the higher rates, and richer people availing of the lower rates more? That needs to be addressed. A lot more research needs to be done on this. There are other issues like inverted duty structures that need to be addressed. Overall, the GST system is nearly 7 years old now. There has been a lot of improvement so far, but there's a long way to go still. But on that note, that's all from us. Thank you so much for watching.